Good morning. It is Friday, March 15th, 2019. I am Kirk Spano, and I was at the Money Show in New York several days ago, the Traders Expo. Very interesting topics, so we will go through that today. And we'll finish off with a little bit on China. That was actually one of the topics at the Money Show. But the Traders Expo, which goes around the country, was pretty interesting. It was my first time going, and I met a lot of people, including this guy, Robert Savage, who we'll talk about a little bit in a minute. I met John, not John Nigerian from CNBC, ridiculously smart and connected guy. I would pay attention to him. I don't know if his service is worth anything, but he's got good information, and he said some things that I thought were pretty important. Met Murray Ruggiero, who I've known of for about a decade. He is one of the guys who writes algorithms and trading systems using intermarket analysis, and he's very good at it. So I got a chance to talk to him, and probably about 10 other people that I introduced myself to. So what I will be kicking off here when I get back to Milwaukee in a couple of weeks is having a number of guests on the show going forward. Probably not every week, but most weeks. And I think the format's going to be 20 to 30 minutes of me, and then 20 to 30 minutes of a guest, and I'll probably break it into two different recordings. So that will be going forward. Got David Modell lined up for a couple of weeks from now. We've got a cryptocurrency expert who's with FA Trader that I got to know pretty well, a guy named Ryan, a very smart guy. Bob Savage is going to come on. I've got several other people who are pretty connected in the know people, a couple of corporate executives. So we're going to change the format of the show probably 3 weeks from now and start bringing guests on. And one of the first guests will be Bob Savage. He has advised people like Paul Tudor Jones and Stanley Druckenmiller. He had a whole list of people who he's consulted with, and he used to be a Goldman Sachs director. Was with Lehman Brothers before that. Pretty sharp guy, and he made one point that I would throw out to you, and he said it very matter-of-factly. But he said, if you're not paying attention to climate change and the impact that it has on the investing world, then you're just missing it, and you're blind. And then he moved on. So he very matter-of-factly said what I've been moving in the direction of. And remember, folks, I've been on oil since the 90s. And for me to change my entire investment firm to being a sustainable investing style firm, basically acknowledging the divestment of fossil fuels by major organizations, the disinterest by the millennials, it's just an acknowledgement of the money flow. So money is leaving the fossil fuel industry, and that is going to be a slow drip until it becomes just a gusher of money out of the industry. So we know that there is a huge movement that you can find at 350.org that talks about divestment of fossil fuels. And one of the things that we know, because we talked about it last week, is that Norway, their sovereign wealth fund, which used to be called the oil fund because that's how they made all their money, and I will go off topic here in a second about what they use that money for, is looking at divesting most of their oil and gas holdings over time. And they're not going to do it fast until they do it fast. So right now they're hemming and hawing about, oh, we don't know we want to do that. I really think they're just trying to get a price, which is what we should be trying to do as well. You want to try to get a price. And I expect that this oil rally that we have has some ways to go, because Saudi Arabia finally said what you heard me saying for over a year now that they should say. And what Saudi Arabia said is, look, if you come after us with this NOPEC legislation, or you come after us in any other way, we will just start flooding the market with oil, and we will crush everybody else. So, the Saudis are clearly in control of the oil market. They got tricked last year by President Trump. Oil's going to go up probably to the upper 60s here in the very short term. And then whether it has that last leg up towards 80, that's anybody's guess. But for sure, it's going to push into the upper 80s. So on our USO trade, what we have to be aware of is where USO trades with regard to the price of oil. So we will take a look at that for you right now before we go back to Norway and a couple things. And we want to take a look at this compared to spot price oil. So I hope you can see that pretty well. USO is at 12.18 right now, and it's been coming up with the price of oil. Oil, 56.79. So if oil is going to get to right around here, and we are now back in backwardation, so that's good for us, we would expect USO to get into that 16 range. There's a little bit of a degradation of the security here because of the expenses, but in backwardation that works in our favor. So we'd expect this to get to around 16. Let's just say 16 for argument's sake. As the price of oil goes up into the middle to upper 60s, could it go a little higher? Sure. Maybe a little lower? Sure. But in this area right here. So just make sure that you understand that the price of USO moves with the price of WTI and where the correlating prices are. I don't know that we're going to get up here. I think we are. I think we'll hit it up here again. But this is what the traders are saying. And I talked to the guys at Forex Analytics, and I'm talking to a couple of the people that I'm affiliated with on other projects. And then my oil trader buddy out in California. Everybody sees the price of oil going into the upper 60s for sure. So, this is where we should look for an exit on USO. Our calls, get rid of the leverage at that point. And the oil companies in the next quarter or two ought to look pretty profitable because they will be getting higher prices. They'll be hedging back in. Remember, a lot of them hedged their prices way up here. So they have hedged prices really from 60, use a 3-year chart, right? But they hedged in about the last year. So they have hedged prices around 60. So they're getting to the point now where they can re-hedge out into the future. Pretty soon, they'll be able to hedge their prices back out. So the oil companies should do pretty well. And they are going to be pretty profitable as a group so long as this price of oil doesn't crash again and then stay down here. Because if it stays down there, right, this area here was very bad. That's where the bankruptcies really took off. But the companies that we're in are pretty good. So XOP, which I have all teed up for you, is nowhere near overbought, has a lot of rally to go. Let me make this a little bit bigger for you. And you can see the money flow is just starting to go in. If we look at it on a weekly basis, money's been drifting in since the end of December, but that's par for the course. Money's been flowing into everything since the end of December. Remember what I said, the first quarter is generally pretty good. And we've only got a few weeks left in the first quarter. By the third Friday in April, we really are going to have to assess, is this going to continue? So there's something that we'll talk about that is important to this time frame at the end of the webinar. But we have to, you know, with oil, we just have to understand this trend. There is a divestment movement. There's over 1,000 institutions that have divested already or are in the process. Norway, which, you know, some of the socialists tout as being an example of how socialism can work. Again, they are a socialist democracy that practices capitalism. The reason they can afford the safety nets and the social programs they do is because they made a ton of money on oil. And when I point this out to people who tell me capitalism sucks and socialism can be great, just look at Norway, I ask them, where's the money going to come from? And right now the theory is, you know, they're just going to print the money. MMT, modern monetary theory, is what's going around. And I will make a point about that in a second and then show you something that, you know, should reinforce it. But the idea that Norway can afford what they can afford, you know, never comes with the idea of where did the money come from. And the money in Norway pretty much all came from oil. So you've got people who are very liberal, you know, they tend towards socialist ideas because it's a romantic notion. And, you know, I remember back in college where I was the econ, you know, international studies guy. And, you know, people say, well, what's so wrong with socialism? And you had to dissuade them of their romantic notions. And, you know, you'd get into those talks down at the brew pub where the one guy was waxing poetic about how great the world could be if we were just socialist, you know, and then I'd, you know, go steal his girl because he was really a moron. And, you know, but this idea that you're going to see this work is unlikely, is the point. So when we think about investments and how socialist ideas would work on investments, if we really move towards a socialist direction, the markets would get crushed. So it's important that we don't. And I think it's pretty important, pretty likely that we won't. I was in a cab, just some of my New York stories here, and actually an Uber. We took an Uber from LaGuardia to our hotel, and we had a Dominican woman who was our driver. She'd been here since she was a kid, U.S. citizen, and we ended up talking about the buildings and the neighborhoods and how the rent was too damn high, and, you know, just trying to feel her out, and, you know, got around to Trump, and she's like, what do you think of Trump? And I go, what do you think of Trump? And we were talking, and, you know, she's like, I can't stand that guy. And I go, well, what do you think about Alexandria Ocasio-Cortez? She's like, I don't know who that is. And I was like, well, you live in her district. What do you mean? And she's your congressman. She goes, I didn't vote for her. So apparently she only votes in presidential elections. She didn't vote in the midterm. And I looked it up. Cortez really didn't win any votes. You know, she was able to sneak through in a primary because she got overlooked, and now she has a platform. But I've got a feeling that she's going to get challenged, and I have this feeling because I talked to some big money people who said, yeah, they're going to run somebody against Cortez in the primary in 2 years, and that candidate will be very, very well funded. So, you know, this idea that she is some force of nature, I'm starting to get the impression that she's a blip on the screen. I would think that she might get beaten in the primary in 2020, and she won't even be the Democratic candidate. If she decides to run as an independent, that means she doesn't have any money, and I don't see people lining up to support her. So, you know, don't freak out with all the socialist talk. I don't think it's real. I think Joe Biden is going to get into the race, and if he does, I think he's going to clean Bernie's clock, which needs some cleaning. So, for us, we just need to keep our eye on the prize, which is the reality that there's a big divestment going on in fossil fuels. And right now it's just a trade. In the short term, the Saudi Arabians are going to press the price of oil up. And that is going to be good for oil until it gets at least into the, where'd my chart go? Into the upper 60s. And then XOP should get to around 40. And again, I don't know if it's going to break past these levels. XOP is more likely to break out the new highs if we're in that 60 to 70, even 80s price range on oil, because then quarter after quarter, they're just printing money, right? So stable oil price in the 60s, 70s, and 80s is very good for some of these oil companies, the basket that we're in. This ETF basket would probably be the second thing that I sell after deleveraging. So after we get rid of USO and reduce some of our leverage on the rally, then the next thing we'd sell would be USO. Why? Because there's a lot of companies here, and some of these companies aren't all that in that good of shape. So the cherry-picked basket, that Dirty Dozen oil stocks that I listed, that'll be the basket that we reduce down to. So we'll go from USO with some leverage to XOP and XOP with some leverage down to the oil stocks, get rid of that leverage too, and then at some point we'll be down to our core oil stock holdings, which will be Occidental, Encana, probably, and I'm not going to say this definitively, but probably Pioneer. So, you've got Occidental here. Encana will be back on this list eventually. Pioneer slid out, but there's 66 holdings. They're in here. So, if you go and get the complete holdings here, you'll get the whole list, and that Dirty Dozen oil stocks is on here. Diamondback, somebody asked me about, if it gets cheap enough, you can buy it. California Resources, people are high on because they do the heavy crude. I think their balance sheet is shit, so we need to be careful with that. They're never really going to pay off their debt. When Occidental spun them off, they loaded them up with so much debt that this is a hyper trading stock. I'd be real careful about that because they're just not going to make enough money to pay that debt off anytime soon. I forgot about Devon Energy. Devon Energy is a rock star, so they're going to be a core holding. Chesapeake is a trade. Man, this thing runs up to 6, 7, 8. We make a ton of money on those calls that we're in, and I think that that's pretty likely to happen. The way that they've set up that company with the merger is great. They really have no expenses in the Marcellus, to speak of, and that gas just keeps on coming. So they're making money there. Some of these other companies are decent too. We've talked about Marathon. We've talked about Hess. We've talked about Apache. Phillips is probably number 3 for pipelines if I was going to do pipelines. But pipelines are challenged long term because there's really not going to be any growth in the pipeline sector after next year. And the way the pipeline model works is they need growth. Otherwise, they're just collecting tolls. And collecting tolls is okay. However, eventually we know that demand is going to fall and supply of pipelines is going to be pretty strong here by next year. So there's not going to be any shortage of pipelines as of next year. And they're really not going to have any more pricing power. So it becomes a pretty easy mathematical equation to figure out whether or not these companies are over or underpriced. And most of them will probably never be underpriced again. And there's just not a lot of upside in them. So the pipelines, I think, are a short-term play. Enbridge, Probably going to get out of them eventually. Kinder Morgan going to get out of them eventually because their revenues are known, the information everybody really has, the growth is going to slow down to next to nothing, and they'll become efficiently priced stocks. So there won't be much upside in them. You know, and I'm not going to hold on to something for a 3 or 4% dividend if there's no upside. Some of the other topics at the Money Show, you know, we're all over the board, but option trading, I will tell you, everybody in the financial industry is trying to get you to buy something, is trying to get you to buy an option trading system or a futures trading system. Everybody wants the amateurs to come in and play with the pros. Why do you think the pros want that? I used an analogy from poker. When I play poker with amateurs, I kick their butt. When I play poker with pros, every now and then I do okay, but generally in the long term, they beat me. So you have to be very careful about trying to trade against the pros because as the market gets more volatile and the big money takes big positions and they do it quickly, and maybe something isn't quite as foreseeable as you'd want, you know, they'll clean your clock. So a lot of these systems and programs that they had in here are worth learning about. But I will stick with my idea when I tell you, you do not want to trade the middle of the market. You want to stay around the edges. When stocks get real cheap, when we get to those bottom fishing prices, that's when you start to sniff around. And when prices get overbought, that's when you sell your covered calls or you close your position. Bob Savage said something in the middle of his presentation. He goes, you know, in 2007, I knew the stock market was going to crash. And I took some hedges. And I still lost money. Why is that? Somebody asked me, he goes, you know, when you think things are going to go down, just sell. And you've heard me talk about asset allocation going 75% to cash. When we haven't done it, and really in the fourth quarter, we should have. You know, we took some hedges, we got to about 25% cash, and we still lost. So that's an important lesson, is that if we really think things are going to turn over, and money flows should help us with that, you know, we don't want to just guess and speculate. You know, we don't want to have our conspiracy theories and our ideology. We want to have some data, and we want to have the ability to make an objective, rational, you know, analysis. And money flow is a big part of that. Money goes in, right? If we know that money's going into the system, right? So right now, this will look like over the last couple of months, we know that money is going into the system. Every position that you look at is going to have that. You know, if we just put in SPY, we can see that money is going into the system, and what happened? Prices go up. Not overbought yet. It'll get to overbought. It's just not there yet. Money going into the system. Not overbought yet. So as this goes up and people get FOMO and euphoria, and this gets up towards 70, 75, that's when we have to start making this executive decision. Do we sell? And the answer is probably going to be yes. And most importantly, we're going to want to take our leverage off, because that's where we'll have made our biggest gains, and that's where we'll have our biggest risk. Gotcha? All right, so Bob Savage, I'm going to subscribe to. And you've heard me talk about modern monetary theory when it comes to people like Ocasio-Cortez and the whole socialism thing. Well, I made the point in a conversation that Japan has basically been practicing modern monetary theory for 20 years. And you know that I did that interview and I've talked about the inevitability of helicopter money. And I've gotten a lot of pushback on that from people that I'm working with right now. One guy just doesn't believe that we'll do it because it doesn't jive with his theory that We're going to have a 10-year depression and a massive rally in gold. And I guess that's a legit theory. Smart guy. I disagree with him. Another guy says, you know, to print helicopter money, we'd have to change the Federal Reserve Act. And I said, okay, call Hank Paulson and give him immunity. There you go, fixed. And that's what I would say, is that this idea that we're just going to print as much money as we need for a very long period of time, that would Japanify us, right? That won't fix anything. That would make us like Japan. We don't want that. What we will eventually do, I'm telling you, this will happen. And the legislation is written already to bail out the pension funds. At some point, we're going to print money to bail out the pension funds. Now, do they extend that and create a lockbox for Social Security? I hope so, but I don't know. The pensions, I know, are going to get bailed out to the tune of around $6 trillion sometime in the not too distant future. Let's suppose that's the only money that gets printed, $6 trillion. Still pretty much money. It would all get invested into treasuries, most likely. I can't imagine them doing anything else with it. Not only are the pensions bailed out at that point so that we can get through the baby boomer retirement, but that's $6 trillion that recycles back into the system over a period of time and relieves some debt because the Treasury, when that money goes into treasuries, now they have the money to spend on something, presumably retiring short-term 1, 2, 3-year debt. And there you have it. So we know that there's $6, $7, $8 trillion of debt that has to be refinanced in the next 3 years, I think it is. And it might be like 12 trillion in the next 5. It's big numbers. So if we bailed out the pensions and that money ended up in the treasury system, now all of a sudden you solve 2 problems with one action. And like I said, the legislation's already written. So this idea that we're just going to print a little bit at a time for a very long period, very unlikely, because again, that turns us into Japan. But if we print a whole big piece of money at once called helicopter money, Milton Friedman, you know, if you want to look it up, Milton Friedman talked about this in the late 1960s. That one-time shock fixes a lot of problems. Now, when we do that, hopefully we're smart enough to run a nearly balanced budget for a very long period of time. I don't think that we're that smart, but maybe we are. Maybe somebody's smart enough to say, hey, we're going to do this retirement system bailout, and then we're, you know, now that we don't have to worry about that, we're going to run a nearly balanced budget. We can run deficits of 1 or 2% because that's population growth and GDP growth. But we're running about a 10% or 11% deficit now under President Trump, and that is a big problem. Jeffrey Gundlach's been all over him for that. So this is one of the theories, ideas that got talked about at the Money Show. Options and futures they talked about. Currency, the dollar, got talked about quite a bit. Everybody wants you to trade currencies. Why? Because you're an amateur and they're pros. And it's a hard game to get into. I've only made 2 big currency trades in my career. They were both spectacularly profitable. I don't know what the next one is, but I suspect it's the dollar getting very strong as other countries have crisis, and we are better suited to handle crisis than pretty much anybody else. There's nobody that can handle a crisis through underlying economic strength like the United States can among the big countries. Switzerland, yeah, if they're not holding their currency back, the franc could get super strong too. But ultimately, I see the opposite of what a lot of people see. Most people see the dollar collapsing. I see the opposite. I think in the next couple of decades, as we go through all these trials and tribulations with retirement systems and retired people all over the world, not just the United States, Europe, Japan, China are all in worse shape than us, we'll emerge the strongest again, as we have for a century, because we'll still have the reserve currency. We have resources, we have a big military, We have property rights. We have a legal system. We have skilled labor. There's really nothing the United States needs at all. You know, we are in a very good position. Nobody has the geographic benefits we have. You know, we're just blessed with the best piece of rock on the planet. You hear me talk about good rock and oil. Well, there's good rock in geopolitics too. The United States has the best rock on the planet, and that will never change. So eventually, I see the dollar getting very strong, and I will write an article at some point that maybe has already been stolen, but I think that the United States is going to be a lot like Switzerland, except way bigger. We are going to have the reserve currency, and it's going to remain the strongest forever. I used to say for several more decades, but the geographic advantage, I don't know, it'll be at least my lifetime, and to me, that's forever. So let's not get on the whole cryptocurrency gold thing just yet, because the dollar, relative to everything else, is stronger, has all the underlying fundamentals. The natural competitor is the euro. It's the only one out there that can be a potential competitor, because nobody's going to trust China in this century. But the Europeans don't understand how important the euro is. And that's too bad for them, because if they understood how important the euro was to them, they wouldn't let everybody chip away at it. And really, we've chipped away at it, and it's been part of our policy. So, you know, let's watch the euro, but I don't see them doing what they should do to make the euro a co-reserve currency, which is what it really should be, but it's not. TLT, long-term interest rates. The next time we have a recession, or the risk of recession starts to rise again, TLT will shoot back up here into the 130s, maybe even 140s. So right now it's at 121. What I'm looking for is good news on China, for this to come down in the teens, the 1-teens, and then maybe towards the end of the year, we will want to establish a position in TLT as we sell off USO, right? And then we take down some leverage. This will be a very good holding, because ultimately the long-term interest rates are going to come down again going into the next recession, probably get all the way back to zero. And, that'll drive the value of the 10-year or the 20-year treasury up. So we will keep an eye on that. I don't think it's ready to be traded yet, but the way this looks, wave, it looks like this can come down one more time, down in here somewhere, and then we'll want to buy it. It'll be a nice, safe investment, and it'll actually be a hedge, and we'll have taken off some of our risk. So keep an eye out for that. But again, I do still like this year. I think this year is going to shape up to be pretty good. Go ahead and learn about the TLT. Right? These are all the things that we're going to have to deal with. This was a topic. Cryptocurrency was a topic. Right? Everybody wants you in these markets. The one thing I will show you, if I have it up, Bitcoin index. Look at Bitcoin. So this is where all the millennials were telling me how great Bitcoin was. I was telling them it was incredible. Remember I told you about the Christmas party. Some kid in the middle of December of 2017 was telling me how he had bought some Bitcoin down here and he caught part of the trade, and I told him to sell it, and he said, well, we'll see. He didn't sell it. All of a sudden, he sold it down in here. So not bad. He only lost, like half of his money. Now, Bitcoin's been basing. Why is Bitcoin important in the cryptocurrency market? Because all of the other currencies are traded in Bitcoin pairs. Bitcoin is essentially the liquidity in the cryptocurrency market. Now, One of the traders I know who's very good at this says that this low point here might be the low. Might be. However, if it turns over again, and I think it will, it could go down into about that $1,600, $1,500, $1,400 range. I think that's what's going to happen. I think Bitcoin has one more drop down, and it'll be quick, and it'll be hard, and it'll scare people out, and you'll get a capitulation. When it gets into the, between 1,000 and 2,000, I'm probably going to start buying Bitcoin because it is the liquidity in the system. And there are several other cryptocurrencies that I'm interested in. They're dirt cheap, but they have specific functions that are important. They're not just hope and dream, hey, Amazon's going to use it someday. No. They have something to do with financial structures, and they have some credibility. There's not many of them, but there are several. And I talked to John Najarian on the side, and I talked to a couple of other people on the side, and there's a guy with one of the organizations I'm with FA Trader, and all of them pretty smart. So I think they get that final wave down in cryptocurrency prices, and then we probably have to buy. So back when I was telling everybody it's going to crash, well, now the crash has happened, and now we got to figure out where that last price down is. Investors are getting exasperated, but we do know, and this is something I learned there are some big funds that are accumulating coins. And one of these funds will get washed out eventually because they'll screw up on leverage or something. And that'll probably play into the last capitulation in the cryptocurrency, in the Bitcoin. Now, maybe they're all smart and there's not one more panic. Maybe. So if you want to buy a coin or two, I get it. I'm not going to. I only want to buy it if it gets dirt cheap. To me, this is still maybe the middle of the market, the bottom of the middle, but I just don't want to deal with it. It's too much risk for me. If this really does drop in half, I don't want to have to deal with that. But if it drops down to that bottom fishing price in the thousands somewhere, then I'm probably going to want to get into it. What else did they talk about? China. So let's take a look at China. A while back, they were talking about getting close to a deal, but they're not quite ready. This is a few weeks ago. Now we find out yesterday, Trump is in no rush to make a deal, but they're still looking to make a deal. But he can still walk away from it if he doesn't like the deal. Well, that scares President Xi, so they're putting off the meeting till April. Kudlow says it's because Xi is afraid of Trump changing his mind. Well, who wouldn't be? So what did we talk about over the last several weeks? Is there going to be a deal or isn't there going to be a deal? Is there going to be a push all the way up to the edge of a deal? And during this time period, China gets a $48 billion deal with Schneider, and they buy some soybeans, and they get some semiconductors to support their markets for a year or two. That's kind of what's going on right now. So could Xi pull back in the next month or two? He could. Or he could just tell Trump, hey, we're not going to give you some of these other things. And then Trump maybe pulls back. Or maybe Trump says, fine, I'll take that as the best deal and tell everybody that's the greatest thing in the world, in which case it's a fake deal. So we're either going to get a no deal or a fake deal. And I don't know which one it's going to be. The no deal probably hits the market negatively. The fake deal probably hits the market positively because that's basically status quo with us selling them more stuff. Status quo on rules with us selling them more stuff. Which I've always said that's probably the best we can get. So if we get the fake deal, I'm bullish. If we get the no deal, I'm bearish. And remember, if Xi really doesn't like Trump, and I get the impression he doesn't, he might just say, you know what, we're getting close enough to the 2020 election. Let's wait him out. Let's get the food. Let's get the energy. Let's get the raw materials. Let's get the semiconductors that we need for the next 18 to 24 months. and then let's just let them blow in the wind and let the United States have a little mini recession in 2020. Trump can't win if the economy's bad. That's just history. So we'll see what happens here. But those are really a lot of the topics that were at the Money Show. I really think if you get a chance to go one of these, don't bring your checkbook, don't bring your credit cards. Just go and listen to everything. You don't need to pay for any of the special strategy sessions. Go see the big people, the John Nigerians of the world, the people who don't really have a magical system. Anybody with a magical system, ignore them. But anybody who's going in there to give you information about what's really going on, go see them. Go see the Bob Savages. Go see the John Nigerians and some of the other people. They did have one oil presentation, and they basically said what I said, that the shale patch, you have to have companies with good balance sheets and good rock and good takeaway. And, there you go. I'll take a couple questions, and then I've got to roll because I got to get my rental car back. Yeah, climate change is a big deal. Any thoughts on buying Boeing? Not yet. I actually put out I just mentioned in the chat, but Boeing, I told you all along, was overvalued, right? So this is just a way to bring it down to fair value. Like I said, my flight got canceled. One of the few. Apparently, there's not a lot of flights getting canceled. I'm on Southwest heading out, but only 4% of their fleet is the 737s. But I was scheduled to be on one. Boeing needs to get into probably the lower 200s for me to be really excited about it. Come on. There we go. Dow Jones. Whoa. Boeing, yeah. It's still at 377. Yeah. Middle 200s to lower 200s is what I want to see. Doesn't make it a bad company. It's just, they're having a little problem. It's going to cost them some money. If they're proven to be partly liable for these crashes, that's going to cost them a lot of money, right? So, no, that's not it. BA. Yeah. I mean, seriously, look at this chart. Did the company change that much that this really makes sense, that big move? I don't think so. I really don't think. I look at Boeing and United Healthcare and some of these companies, they have these charts that just went mental the last couple of years. It's not real. I'm telling you, it's not real. I think they can go all the way down to 200, to be honest with you. So, especially if they have liability in these crashes. USOU, I want nothing to do with it. It's too hard to trade it. I mean, technically, in backwardation, USOU is worthwhile. I would just use calls. It's cheaper. It's easier. Less money to lose. What about the cost of mining cryptocurrencies? So there's different types of cryptocurrencies. They don't all require mining now. But yeah, I mean, I was just talking to a guy at the poker table last night, and he said that mining cryptocurrency became unprofitable. So, I don't look at cryptocurrencies as a replacement for fiat currency. Anybody who runs around saying fiat currency, they've never read Hayek. They've never really read The Road to Serfdom. They've never really read the general theory of money by Keynes. They've never read Milton Friedman or Schumpeter. They've never read any of these people. They don't really understand what they're talking about. Fiat money always exists. And the reason why the economy grows is because the money supply grows as the population goes up. I'll tell you, if population growth ever stops, that will be a monumental event. The thing to keep in mind with the aging demographics is that the population growth rate is in fact slowing. So the rate of population growth is falling and the average age is going up. That presents monumental problems that we have to deal with, including bailing out retirement systems through probably helicopter money. We could do MMT like Japan basically has done, but that doesn't really fix the problem, right? It doesn't give you that jolt. So just understand that every so often the system gets a jolt because we're too dumb to plan for the future. So we wait for the crisis and then we fix something. Sometimes we fix it the right way, sometimes we fix it the wrong way. This idea that the Federal Reserve with the quantitative easing did things the wrong way, no, they did things the right way. However, that doesn't mean that they completely fixed everything, because the retirement crisis, you know, they had to fix the debt crisis first, the liquidity crisis first. The next crisis we're going to have is not going to be a debt crisis. It is going to be a retirement system crisis. So, you know, the reality is that we have as much debt today as we did 10 years ago, but the world economy is much bigger. So that means, relatively speaking, we're in much better shape, much better shape. Just because the nominal numbers are the same doesn't mean that we're in worse shape. The economy is much bigger. So then the leverage is actually lower, and the counterparties are in fact better, and the central banks are on it, right? So that doesn't mean we won't have a crisis, but it'll probably be different than what you expect. That's the whole nature of the black swan. To me, the retirement system is the black swan. Why people don't entirely anticipate it coming is beyond me. I know smart people that are, you know, and you can read them online. Read Larry Summers or Neil Kashkari from the Minneapolis Federal Reserve. But this idea that cryptocurrencies are going to replace dollars, replace the yen, replace the yuan, replace the euro, replace the IMF special drawing rights, right. Look, there aren't that many people who use cryptocurrencies, and it's not going to get mass adoption. But there are functions for it for transferring fiat currency. And that's what Bitcoin or something is going to become. It's going to become a method to transfer actual money using blockchain. And that's what's coming. So JP Morgan, Bank of America, PayPal, these are all companies that are setting up be part of that system, right? We have JP Coin already. And Bank of America has more patents on blockchain than anybody. They are the number one in patents. JP Morgan's like third. PayPal has patents. So you take a look at who owns the intellectual property, and what you start to realize is that a system is going to emerge in the not too distant future where money transfer becomes a very low cost, very fast, like seconds, sort of endeavor. You know, right now, transferring money is expensive and bulky and slow. That's all going to get fixed using blockchain, but that doesn't mean that Bitcoin is going to rule the world, and that doesn't mean that some of these other cryptocurrencies, you know, Ethereum or EOS or whatever, that doesn't mean they're going to rule the world. It just means that they'll have a function. So, like any other asset, we have to look to see if there's a pricing inefficiency where we can make some money. If Bitcoin gets under 2,000, I think that that's the blow off bottom, and I want to buy that. At 3,800, I'm afraid of it going to 2,000, right? So I don't want to do it. Make sense? All right. So we're going to call it a day. I have to shower, turn in my car. Had a nice little story when I picked up my rental car here. Budget had a whole bunch of people show up at once, so I had to wait in line over an hour. I wanted an SUV, got up to the front of the line, said, hey, we're out of SUVs. Are you by yourself? I said, yep. He goes, well, how about I give you a Mustang at no additional charge? Well, the last couple of days have been fun driving a Mustang. So I'm turning in my car for a couple of days, hanging out with my brother, and then driving out to Albuquerque. Eric and Doc, I will get a hold of you tomorrow morning and let you know what my plans are. I haven't booked a hotel yet, so I have to pick a hotel. I think I want to be near the downtown area towards the side with that one big park. But I will give you an email real soon. Have a good, exactly. Have a good weekend, everyone.